Okay, it's June 2nd, 2014. Taking the time to make this video today because this is really a perfect example of the way in which I use a kind of relaxed version of Elliott wave. So I'm not using very strict rules as far as using the higher time frames and the larger structures to determine today's trend or how I'm going to make my decisions on a 5-minute chart. Based on a daily chart. I'm not exactly using it that way, so I'm more of simply looking at the structure, labeling it in a way that makes sense to me per the Elliott wave rules, somewhat relaxed rules, and then determining where the best place to get in and get out would be. Now right now what we're seeing is possibly the end of the fifth wave. The perfect end to this wave would be right in here. Let me explain that now. So you can see I have these larger black lines marking the larger wave structure. So let me label those now. And I'm not using the strict code for whether I'm using Roman numerals or Arabic numbers or what have you. So I'm just going to basically just throw it on here. So 1, 2, 3, this is 3. This is a triangle 4, and then we would be looking for wave 5 down here. Okay, so let me break this down. Now you can see we have wave 1, 2, let me do it like this, 3, 4, and then 5. And then obviously an A, B, C zigzag for wave 2, and then 1, 2, 3, 4, 5 of 3, and then we have the A, B, C, D, E for triangle wave 4. Okay, so what I'm looking for now, 5 waves down for wave 5. It could be some kind of a just a slow moving sideways to down kind of a fifth wave. Right now you could say we have 1, 2, 3 down, and this is 4 back up, so we could be expecting a push now down to here. So this is what I would like. You can see I have 2 sets of trend lines drawn. I have from 0 to 2 connected down to wave 3 for a potential end to the fifth wave. So I would like to see us overthrow this white downward sloping trend channel and then hit this Fibonacci confluence zone for the projection for wave 5, and then see a very strong move out of this. Now the other trend channel that I have here, I've connected from wave 1 to the end of wave 3 and then up to the end of wave 4. Now this is basically going to provide resistance on the way back up through this. So you can see that we actually pulled to the bottom of this third wave here where it meets that trend line, and we have not gotten through that zone yet, so we're turning back down from there. You can see we had the volume come in at this point, so what I would love to see would be the volume divergence pattern right at this low. So we get the spike high in volume here, we pull back, and then we come back down a little further on another spike in volume, but one that is lower than this previous one. So that's what I would be looking for at this area right here. And I'll be looking to buy that area once we get down in there, if we get down in there. We could have, this could be the low right here, and we could do this, but this would be the picture perfect low for the end of the retracement, for the end of this downtrend. Now, the main trend line that I should be drawing on here, which I have not done yet, would be from 2 to 4, and then back to 3 and to 1, but let's connect it to 1 first, because obviously that would be hit long before the one connected to 3 would be hit. So this, let me just make this a different color now. Let's say, okay, we're at the midpoint now. I think that's what we're shooting for. Let's connect it to the end of wave 3. We're really shooting for the midpoint of this down sloping channel. So this would be right here at that exact point, time and price right there. If we could make that spot right there in time and price, then we could expect a lot of volume come in at that spot, essentially. So we've got 2 to the end of wave 4 connected to the end of wave 3, and we're using the midline of this down channel as support. A beautiful, beautiful trade. It would be a textbook Elliott wave. Once we get to this spot, we'll see what's going on with the volume, how the market reacts, and then we'll place a trade accordingly or not place a trade. Okay, great. We're coming down now. Volume is coming in on that trend line. The 0 to 2 connected down to 3, bottom of this channel. So we have had an influx of volume now, but I would think we'll go on down and hit this 102.13. We came down to 102.15. Let's put in one contract at 14,
order pending,
one contract at 13,
order pending,
one contract at 12.
order pending,
That's 3. I can buy up to 5, and then I'll have my stop here at 107.
order pending, order pending, order filled, order filled.
Maybe I should have it 1 more down, actually 2 more down. Okay, so now we're at the zone. If it comes blazing through this, then obviously I'm dead wrong, and I'll have to get out. But right now,
order pending.
so that's the largest position I'm going to trade in crude. No more than 5 contracts. I'm curious to see what this is going to plot in the relative volume. At any rate, I'm got pretty good trade placement on this one so far. Looking at some other tools, we have divergence in, well, let me just show you this. We have divergence in bid-ask volume, tick count, up-down tick with continuation. I'm just doing a little comparison with these two, but yeah, we've got a good-looking spot for a reversal. Maybe we'll come a little bit lower. My average price would be, yeah, this needs to be 2 ticks lower. I think that's enough. I don't want to add too much. I'm essentially just trying to show, you know, the Elliott wave pattern here mainly. So this would be akin to trying to catch a falling knife, which is essentially what I've done here. But the only time you can do this is at the end of a pattern. So if you know what you're doing, you know where to do this. In my opinion, this is one of the safest trades. You get incredibly good trade placement, excellent risk to reward, quite excellent risk to reward. You know, the lowest risk per trade because you're getting in on a down bar. You're going long on a down bar, so you're getting in right at the lows, right at the spot at which you're expecting the reversal. And if you're wrong very quickly. You don't risk very much. So this is one of my favorite types of trades. You'll see if when it goes up, how it reacts to this area is going to determine how I manage this trade, and obviously how it reacts to this 4th wave high. And just to be brief, you know, putting the stochastics, the derivative oscillator, and the MACD aside, the only reason I have these on here is because I'm testing something in Bloodhound. So, you know, regardless of what they're doing, even though this would be from the hourly cycle, the 1538, the K is quite oversold, and we have a kind of divergence to some extent on the 15-minute cycle. But putting all of that aside, you can see we are close to support 2 for the floor trader pivots and the second standard deviation VWAP. It would have been great if you know, this fib confluence zone in the midpoint of that downtrend channel were in line with this floor trader support 2 and the second standard deviation VWAP, but it's not quite. What I would love to see right here would be the volume divergence set up on the 1 minute, and then fill my orders there. Let me bring one down, right down to the S2. And if those get filled, then I'll be long 5 with a stop right here at 103. So at that point, it would end up being about a 7-tick stop. if you understand that, because my average price would be much less. It would be around 10 or 11. Well, it would be 11, so it would be about an 8 tick stop once the average price is lower. And here we come. So I'll get these two filled, hopefully, and then we'll see how it reacts here as support 2. Alright, so let's say that I do get stopped out. Well, I would not be looking for a short then, because this is what's looking to be a completed pattern to the downside. Alright, the next thing that I would do for this market anyway would be try to find the next spot where it would turn up from, and that would most likely be right here, where the 1618 is intersecting one of these downtrend channels. In this case, from the 2 to 4, and then connected to the 3, which would be right here. So that would be the next spot right in here that we would look to get long from. That's if we get stopped out here. You know, could very well happen. It's looking like we only have 1, 2, well, we have 5 waves down now, so we'll get kind of an extended move. This would be like an extended third wave of the fifth if we do decide to break through and then come on down to this area here. Okay, so you can see I'm out of the trade. It's actually the next day. I didn't have time to film this as I had to work with a few other people in the afternoon, but you can see it did exactly what it should have done, in that it, you know, after this pattern completes, pulled back to the end of the 4th wave. That's usually the target, and once it got there, it basically the market closed, and then it kind of drifted off, and then it did pull higher up into the trend line from 0 to 2, and then backed off a bit, and then kind of, you know, went sideways, and now it's coming down a little bit. You can see at this low where I bought, at the confluence zone and the center line between channel 1 to 3, and then connected to 4. At this low, we had the highest relative volume. It's over 550% of normal. So that's a very telling sign also, and it pulled right down to the confluence zone. I mean, that's always going to be a good spot to get in or out of a trade. It was also, the exit was also the VWAP, the session VWAP right here, and it was the 61.8 fib of the day session. So starting from the open at 9 o'clock Eastern to the low, this was the 61.8 retracement. That's pretty much it. Got long here and exited here. You can see I took one off right at the top, and then wanted to see if it could break through this when it pulled back to the VWAP, and then started coming lower. I went ahead and got out of the other 2. 3 contracts. I had made just a little bit of money before that. Lost a little bit in the morning, made it back, and then this 3 contract trade brought me up to 12.55 for the day. Okay, so that's pretty much it. Just wanted to show how you can use Elliott wave. Now it's, you know, this is pretty much a perfect Elliott wave pattern. That doesn't happen very often. But when I saw this triangle unfolding, I knew that this was most likely going to be a 5th wave down, and that buying this low would probably be a good spot for a bounce. And that's how I managed that trade.